All right, what's going on, traders? I hope you guys are all good. Today we are going to delve deeper into order blocks. For anybody who has never heard about order blocks, or you have heard about order blocks but you don't know much about order blocks, this video is for you. We are going to get into the definition. What is an order block? We are going to locate it from the charts. We are going to locate the various points where you can execute from an order block, and so on and so forth, so that you will be able to actually trade this using this strategy with gold, because it really works well with gold. It's actually what I use. Let me show you the stats briefly. So these are the various strategies that you can use. Okay, and in breakout strategy, pullback, reversal, trend continuation. In the program that I'm using right now, I haven't actually used these particular strategies. For the liquidity sweep, I've used two trades. I've used the liquidity sweep strategy in 2 trades. I've only had 1 win and 1 loss, so it's a 50% win rate. The order block strategy, or under SMC, under smart money concept, I've taken 16 trades. I've won 10, I've lost 6, and that gives me an 80% win rate. Okay. All right. So getting back to the charts, I want us first to know what an order block is. Theoretically, I want us to know what an order block is. I'm going to hide this first of all, so that we'll have this definition over here. So from this definition, an order block is a specific price zone on a chart where institutional investors like large banks and hedge funds theoretically buy or sell in large volumes. It usually appears as the last opposing candle right before a strong, sudden price move. Okay, that's an impulsive move either to the upside or to the downside. Okay, so the points to note in this definition is that there are institutional investors involved, like large banks and hedge funds, and these are people who actually move the markets make big moves in the markets. Okay, so they sell or buy in large volumes. Okay, and this usually appears as the last opposing candle. Okay, so the last candle before an impulsive move. So for example, if there's an impulsive move, you can see impulsive move to the downside, candles just moving to the downside. The last candle before that impulsive move, that's what we call an order block. Okay, and even before we go to the charts, there's something else I want you to know, or rather to note. There's some other things I want you to note. Enough with the definition. I hope you have captured that. So how do you know a valid order block? How do you know a valid OB? How do you know a valid order block? There are some confluences or some confirmations to tell you that this order block is actually valid, and you should take a trade from that particular order block. Okay, so the first confluence you're supposed to know, sorry about that. The first confluence you're supposed to know is that there has to be a structure. Okay, the market has to have a structure. Okay, one confluence, the first confluence you're supposed to use or to know that an order block is valid, there has to be a market structure. Okay, all right, what does that mean? I'm going to explain it to you right now briefly. So for example, we have something like this. The market is creating higher highs and higher lows. Okay, so this is what we call a bullish market structure. Okay, if you're having the market doing this, that is to tell you that the market is bearish. Okay, sorry about my drawing. I know I could do better than this, but you get the point about the drawings. This is a bullish trend. This is a bearish trend. Okay. Then we have this. This is what we call a consolidation. Okay. And between these three market structures, okay, between these three market structures, you are not supposed to trade an order block when the market is in this structure. When the market is in a consolidation, you are not supposed to trade an order block because it's not going to work. You need to have the market either being bullish or bearish. Sorry about that, or bearish. Okay, so after you discover that the market has a structure, you are supposed to go to the next confluence, which is the second confluence. Is there has to be a break of structure. Let me do this in caps, or a church. What is a church? A church is a change of character. A church is the short form for a change of character. So there has to be a break of structure or a change of character. Okay. So for example, let's assume you are suspecting that there's another block over here. Okay, we are bullish right now. Okay, we have said that another block is the last candle before an impulsive move. Okay, so it has to be somewhere over here. Okay, before this impulsive move. Okay, now for you, the second confluence or the second confirmation to confirm that this order block is valid is there has to be a break of structure over here. Okay, as you can see, and that's exactly why the first confirmation is there has to be a structure. Okay, and the structure is not just a structure; it has to be either bullish or bearish. Okay, so this is a break of structure over here. You mark it like that. It's a break of structure. All right. So you have to have a break of structure for an order block to be valid. Okay, to confirm the validity of an order block. So that's the second confirmation. The same applies to a bearish market. When the market is bearish, you might suspect that there's an order block here. So you have to confirm that there is a break of structure. You have to confirm that there is a break of structure. Okay. So here is the break of structure over here. Here is the break of structure. All right. Here is the break of structure. So the markets, how order blocks work from this point is that the market has to come back here, then push to the downside. Although the first pullback might not actually touch it, the second pullback still might not touch it, but there might be a reversal from this point to this point, then push downwards. Okay, so that's how they actually work. So it's not all the time that the next reversal will come back to your order block. It might even take ages. It might take weeks before it comes back to this order block, and still it will be valid. Okay. Let's go to the next confluence. The next confluence is something we call an imbalance. Imbalance present. There has to be an imbalance present. Let me correct the. Okay. There has to be an imbalance present, or what is commonly known as a fair value gap. Okay, an FVG. There has to be an FVG, okay, above the order block or below the order block. Okay, so for example, if the FVG is in a bullish trend, if the FVG is over here, there has to be if the order block is over here, there has to be an FVG over here. All right. So this should be, there has to be a fair value gap, an imbalance. Let me mark this as an FVG. There has to be an FVG like that. Fair value gap. If this is the order block, let's mark it as an order block OB. If this order block is to be valid, there has to be an imbalance here. Okay, because the logic behind having an imbalance over here is because the market always comes back to clear, or rather to fill, or to balance. Okay, for example, because a fair value gap shows that either there was more buyers than sellers, or more sellers than buyers. Okay, so the market will come to clear, or rather to make a balance over here. So you are actually assured that the market will come back to this point, and that even gives you the patience to actually wait for the market to come back here to this order block and push upwards. So for an order block to be valid, there has to be an FVG, or an imbalance. Okay, the same will apply to this order block, which is in a bearish trend. The order block should be somewhere here. I mean, the fair value gap should be somewhere over here. And many a times you will see the market pushing to the upside, making a break of structure to the downside, then coming back, reacting to the fair value gap, then pushing to the downside. Now, don't be lied to that now gold will not come back to this point. It will come back. As long as that point has not been touched, gold will come back to that point. All right? Gold will come back to that point. The fourth confirmation, or rather the fourth confluence that you're supposed to check to ensure that your order block is actually valid, is something we call unmitigated. It should not be mitigated. It should be unmitigated. Your order block should be unmitigated. What do I mean by it should be unmitigated? Saying that your order block should not be mitigated means that it should not be touched at any particular point. Okay, so for example, this order block has not been touched. It doesn't matter. It doesn't matter if the market goes like this, then continues to push the upside, then starts coming down. Okay, comes down, passes the FVG, then touches. When it touches here, you're supposed now to position for a buy, because let me remove this first. Let me delete this. I want to explain something right now about an unmitigated order block. Okay, this looks really bad. This looks really bad. Okay, good. Now, from this point, you're supposed now to position for a buy from this point. Okay, it doesn't matter if it took ages for you to come back. You're supposed to position for a buy from this order block. Okay, because there is no point in time at any point in time. There's no what do you call this? There's no touch on the order block for it to be pushed upwards. In short, the order block has not been used at any point in time. You can see the market just came, started consolidating over here, then push to the downside aggressively, so that it will touch the order block, then push upwards. Okay, and so this order block has not been mitigated, and so it's still valid. So when it immediately touches here, you position for a buy, and that's how you get into profits. You target the last reversal point. Okay, the last reversal point, or rather the swing high. Okay, you can target the last reversal point, which is a very safe place to take profit from, or you can target the swing high. All right. So those are the confluences that you're supposed to use to confirm that your order block is valid. I hope you've written all this, because now we want to go straight into the charts I'm gonna delete all this. I'll have to delete all this. Let's get into the chart now so that you can see how the order blocks actually work. I can see an order block over here. And remember, this works in all time frames. From the daily time frame, 4-hour time frame, they work perfectly fine. We can start with the 4-hour time frame. Let's look for an order block in the 4-hour time frame together. Let's look for an order block in the 4-hour time frame together. All right, I see an order block over here. Now, recently, we have had this. Let me mark it out quickly. This is an order block. You can see that you can clearly see that there was a break of structure over here. That's the first confluence, is that there's a break of structure over here. Okay, that's the first confluence you're supposed to check. There's a break of structure over there. Okay, perfect. There's a break of structure over here. So we have to be having an order block over here. So you check for it. If it's not there, the second confluence you can confirm quickly is because is the fair value gap. Is there a fair value gap? Yes, there is an FPG over here. There is an FPG. So clearly it's valid. Was it mitigated? Yes, it has been mitigated over here. So when the market pushed downwards and created a break of structure over here, it came back to get back to the order block. Okay, and if you're a OB trader, you could have positioned there for that sell. Okay, like that. You could have positioned over there for that sell and taken profit around there, somewhere around there, or over here. Point. After the best place is to take at the last reversal point before it went back to the order block, right? And the stop loss should be just above the order block to give breathing space to your trade, right? Remember, an order block also acts as a resistance point, and so that's why you see it has been mitigated here, then it comes back, it still drops the second time because it's a resistance point. Okay, the market resists an order block. So if it's used over here, it might come here, then the market reacts, but eventually it will pass through if the order block has already been mitigated, right? Very nice. Let's look for another order block. I've seen another one over here. Yep, we have this order block over here. We are going to confirm the validity of this order block in a minute. It's an order block. The last candle before the impulsive move to the downside, right? Now, notice that this order block has caused a break of structure over here. That's a break of structure to the downside. Okay. Is there an FVG present? Very much so. There's an FVG present between these two candles. FVG is present. Has it been mitigated anywhere over here? Has it been mitigated anywhere over here? No, it has not been mitigated anywhere. So it's gonna come here, position for a sell, position for a sell quickly. Target the reversal points. Okay, you target that reversal point. It took a little bit long. If it was me, I could have closed over here or over here after this reversal. But yeah, it took long. This is like so many days. This is because we're in the 4-hour time frame. So for me, I could have taken profit just over here, right? Very nice. So that's how you locate order blocks. And this, I've actually told you, it's valid in all time frames. It's valid. It's very valid in all time frames. Let's drop down to the 1 hour. Let's see if in the 1 hour there will be something to. Okay, there's another block over here in the 1 hour time frame. I hope you can locate these other blocks as I locate them. This is another block over here. The last this red candle is another block. It is the last candle before this impulsive move, and this impulsive move has actually caused this break of structure. Or rather, yeah, it's a break of structure, not a change of character. It's a break of structure. As such, to the upside, there's a fair value gap over here. It doesn't matter how small the fair value gap is, it's still a fair value gap. You can see the gap over here. So that's is further confirmation for that order, the validity of that order block. Now the market is gonna come back to this point, position for a buy from this point. Okay, you position for a buy from that point. A stop loss should be just below the order block, like that, and that's how you hit TP. Okay, TP, the take profit should be at this point. You can see it hit TP, then continue pushing upwards. And yeah, I feel like there's a confluence I've forgotten. I feel like there's a confluence that I've actually forgotten. There is a fifth confluence that I've actually forgotten. I'm gonna tell it to you right now. We have forgotten a fifth confluence. I'm so sorry about that. The fifth confluence that you're supposed to confirm, and this is very important. It's very important. I don't know how I missed this. I'm so sorry. Is the liquidity. Okay, liquidity lying above or below. Okay, there has to be liquidity lying above or below. This is very important. I had missed this out, but yeah, it's the fifth point that I want you to add. It's not too late. It's not too late. You just add it there. Now, what is liquidity? Liquidity will be indicated by this. This week's you see over here. This is just liquidity. I'm gonna mark it with the dollar sign. This is liquidity. This is liquidity lying above. All this is liquidity. And so the market will always clear liquidity. Okay, so there has to be liquidity for this order block to be valid. There has to be liquidity lying above. So the market will come and clear this liquidity and come back to this point and push to the upside. Okay, that was a very important confluence to miss, and you should actually add that to your list of confluences you're supposed to confirm an order block is valid. Okay, so there has to be liquidity lying above or below an order block, right? We need to look for a bearish order block. Let's go to the 15-minute time frame so that we can locate a bearish or OB. Let me remove these. Can you get a bearish OB? Let's look for a bearish OB. I think I had shown you a bearish OB in the 4-hour time frame, if I'm not mistaken. Okay, we have another block over here, 15-minute time frame. All the confluences are very much present, The first break of structure that happened here is here. This is the first break of structure that happened here. It doesn't matter where it happened, as small as it is. This is a break of structure. Okay, the first break of structure was that one. There's also in the high time frames there will be a break of structure over here, but we won't actually write it down. Liquidity lying above is present. This is liquidity. This is liquidity, and it's also good to know that the more you know about order blocks, the more you will now learn about where liquidity levels are, where you're supposed to enter a trade. Okay. So, for example, if the market comes here, then you say that this is an order block. Okay, which is true. This is an order block. There's another order block over here. This is also an order block. Okay. There's also another block over here. Okay. There's also an order block over here. And I have one rule about order blocks. And this is how I trade order blocks. I never enter, or rather, I never use an order block which is below an order block. Right? I don't know if you're getting this. I never use an order block which is below an order block. Okay. So, for example, if I have this order block over here and there are like two order blocks below me, I don't actually use. So, for example, if the market comes here, then comes back here, I'm not going to take this order block. Okay. I'm going to take the furthermost order block. Okay. And which is this. Okay. Of course, there's this order block down here, so I could have bought. We saw this trade in the 4-hour time frame, right? We saw this another block in the 4-hour time frame. It is as big as it seems. It's as big as that in the 4-hour time frame. In another video, I'm going to show you about how to narrow in your order blocks, how to do top-down analysis. Because in the 4-hour time frame, when you see an order block like this, it is really depriving you of space in your entry time frame, which is the 15-minute time frame or the 5-minute time frame. And so you have to zero down to the 15-minute order block or the 5-minute order block. Okay. So I'm going to do a video on that, on top-down analysis, so that we will do analysis from daily time frame to the 5-minute time frame. All right. So a point to note over here is that never take a trade in an order block that is below a furthermost order block. Okay, because it is like the main order block that you're supposed to take trades from. Okay. So there's an FBG. We have not confirmed an FBG. Yes, there's an FBG over here. The break of structure is this one. Okay, this is the break of structure, or in case you didn't see this break of structure, there's still a very valid break of structure down here. All right. Now, in this particular trade, I could have taken a sell from this. Sorry. I should have taken a trade from this order block. I could have targeted somewhere like that, but as you can see, the market reversed from this breaker block. This is a breaker block. That is another lesson for another day. But basically, a breaker block is an order block which has failed. Okay, so yeah, the market could have hit stop loss because my stop loss is normally somewhere around here. But that's just part of trading. So it could have hit stop loss and pushed upwards over here. But later it could have just dropped down. Okay. Remember, a failed order block becomes a breaker block, like this one. So this is another block that was here. It failed. The market pushed to the upside, then came down, then used it as a support. So a failed OB becomes a support. Okay. A failed OB becomes a support or resistance depending on which type of order block you're using. So if it's an order block that you are anticipating a sell from, if it's an order block and that order block actually fails, it becomes a support for the market. If it's an order block that you're anticipating a buy and it fails, it becomes a resistance for the market. Okay, I'm going to do a video about that. I'm going to do a video about breaker blocks in another day. So I think that's just about order blocks. Okay. And if you're looking for a strategy that is not cumbersome and doesn't have a lot of shenanigans, a lot of unnecessary terminologies, order blocks is the best. And order blocks, gold works with order blocks like every time. There's no time it's not going to react. It has to react. Even if it's the order block will fail, it will react, then come, it will give you some movement, okay? And you will get some profit from that, okay? The only thing that you need to have in trading order blocks is a lot of discipline, a lot of discipline. Because, for example, this order block, as you can see over here, let's go back to the 4-hour time frame. Let's go back to the 4-hour time frame, okay? Where's that order block? Okay, let's use this one, this order block. The moment you locate this order block and you see that there's a break of structure down here, you have to wait now for you to come back here. And remember, this is the 4-hour time frame. So these are days. You're waiting for days for the market to come back to this point. Although in the 15-minute time frame, it might not be the case. But let's say you're a day trader. You have to wait for all these are days that you're supposed to wait for the market to come back to your position. Then come and position a sell trade over here. Okay. For the day traders, you really have to wait. Although there's a lot of movement, and so you're gonna get a lot of profit from that. The stop loss is just above there, and voila, that's how you trade order blocks. All right. So I hope you've learned something in this video. In the next video, I told you I'm gonna do a video about breakup blocks and how to trade them. All right. So until next time, continue trading, continue believing in your goals in trading. You're gonna get it, and I'm rooting for you. Okay. So peace.